Okay, we got another week, another update of the rental house versus high income ETFs. So, if you're new to this series of videos, we've sold most of our rental property. One of the last properties we sold was this blue house here on the screen. And we took the 70,000 approximately that we received from that house and we invested it into some covered call ETFs with the theory that covered call ETFs would outdo the money that we would get from rents if we would have kept the house. So the house was paid off, so we took the 70,000 and just dumped it in the ETFs. So I should mention that we were able to buy these houses, several of them, without really any down payment. I've been asked what has been my cap rate or my rate of return on these rental houses. Most of these rental houses we had already paid off, and my local bank would allow me to buy new houses, borrow extra to fix it up, and finance 100% and use equity from the other houses. After we fixed the house up, they would release the lien on the other properties because these new houses would appraise for enough to cover the loan that I had. Let's say this house, for example, I would have 70,000 into it from the purchase and the rehab, but it might be worth 100,000. So the bank would say, we don't need extra collateral. We did that several times. We bought houses with no down payment. We'd buy a house, fix it up, rent it. The bank would release the lien on the first house, and we just repeat and rinse and repeat. We accumulated several houses that way. Over time, we had most houses paid off and we sold them all. My point is, people will say ETFs are a lot better than rental houses. The rental houses got us to where we were and they were paid off. At that point, once they were paid off, I felt it was better to do the ETFs. If you're just starting out, have very little money, you might be able to buy some rental houses with very low down payment, cash out of pocket, and then time will create equity and you could build some wealth that way. So that's what I recommend for younger people. Unless you absolutely don't want anything to do with rental property, then you have to build money through growth funds and do it the old fashioned way. So just wanted to throw that out there and make sure people know that I'm not anti rental house. It's just that it was time to move on to something different at this stage in my life. Saying all that, I hope you would subscribe and enjoy these videos and help us get to 1,000 subs. Anyhow, I like to look at some things each week, helps me decide if it's a good time to add some shares to my portfolio. I look at the SPY, the SP 500. I don't look at charts for every single thing. I just want an overall picture of what the stock market's doing. So this is the SPY. Some things I look at is the Bollinger Band, 20-day moving average, and the relative strength index. I don't try to time the market, but what I do is time when I might add some more shares, which actually just happened. So I've been waiting for a dip here to buy some more shares. There's a dip here. And did I add some shares back then? I may have. So anyhow, the market took a little dip this week, and so I took that opportunity to buy some more shares. And it got down near the 20-day moving average, and I was watching the RSI. Things had been overbought, and it dipped down a little bit. It's not the perfect time to add more shares, but I've been just itching to buy some more, and that little bit of a dip gave me the go ahead. So let's look at what we own here. So my equity is 88,205. I'm using 77,687 in margin. So I consider margin the same as what a loan on a rental property would be. It doesn't scare me. People are scared of margin. It's just a loan. It's not like taboo. It's not evil. It's not going to kill you, I don't think. So anyhow, so what do I own? I own 225 shares of SPYI, 500 of GIAX, 225 of QQQI, 150 of MAGY, 700 AIPI, and 2,700 of QDTE. So the QDTE and the AIPI are the ones I've held the longest. So the newest one is MAGY, which is a weekly payer. got 150 shares. My favorites are actually QQQI. My second favorite is SPYI. Those are my favorites. I have those ETFs in multiple accounts and probably consist of at least 5 to 6% of my total holdings. So I actually bought 25 shares of SPYI this week, 25 at QQQI, and 50 shares of MAGY. We'll talk about that more in a second. I probably don't have these slides in the most logical order, but it is what it is. So some people question if I'm beating the S&P 500. So for this experiment, I'm up 26%. And I started this November 1st, 2024. This is the return on some different things I'm holding. If I would have just bought these and held them without margin, this is what I'd have. So if I had just the SPY, I'd be up 14%. QQQ up 19%. IPI is up 14%, and then GIX up almost 9, QDTE up almost 14, SPYI up about 12, and QQQI up 17. So if you look at this, QQQI is doing the best at 19.52, but the second best is QQQI. And that's one of the reasons why I like it. I mentioned last week, people say, why don't you just buy a QQQ and then sell some shares every week and every month and pay off your margin that way? I just rather let QQQI and all these cover call ETFs pay the weekly, monthly distributions. That goes straight to the margin. I don't have to like time the market or anything. And it's just easier that way. And that's the plan I had when I started this project. And you can't argue with 26.01% return when the S&P 500 is averaging about 14% or the QQQ is up not quite 20% in that same time period. So I am beating the indexes and you can't complain about that. So I mentioned I bought some more shares of some things. Here I bought MAGY, 50 shares, and QQQI and SPYI, 25 each. So I was looking at buying 100 shares of MAGY, but I keep telling myself I need to build up QQQI and SPYI. I want to get those built up to the amount where they equal the 70,000 original dollars that I put into the market. Because in my opinion, QQQI and SPYI are ETFs that I probably will hold forever. That's something major changes in the stock market, but I like those funds. They're my forever funds. I want those to be my anchor funds of this account. So if I had to do over, I probably would have bought SPYI and QQQI originally and then added some of the weekly cover calls like QDTE and MAGY and AIPI is a monthly payer, but I would have added those second and made my biggest holdings QQQI and SPYI. So if I had to do over, that's what I would do, but I'm not complaining because things are working out pretty well. So now let's look at what has happened recently. A lot has happened recently in the past week. I've collected some distributions from the SPYI. I've collected some from QQQI, so 105 here and 128 here. I collected 178 from GIAX. I collected 550 about from QDTE, 873 from AIPI. And here you see where I bought the 50 shares of MAGY, the 25 of SPYI and QQQI. My plan going forward equals a little bit over $5,000 worth of shares that I bought this month. And I'm collecting close to 4,000 a month in distributions. My plan is probably to continue doing this, buy 50 shares of MAGY and then 25 of SPYI and QQQI each month after the dividends are paid each month. So the price usually dips down for whatever the amount of the dividend or distribution that it pays out. The MAGY pays weekly. So if there's a dip in the market sometime in the middle of the month after it pays out a distribution, and if the market's down a little bit, 0.5% or 1%, I may buy the 50 shares of MAGY at that point, then add the SPYI and QQQI later when they pay those distributions. And here you can see the total distributions for the month. The 29 here. That's not quite calculated in yet. I do see that I'm going to get this $56 from MAGY on Monday. You can see that I was getting around 37 each week. I bought another 50 shares, so that jumped the distribution up about $20. It's nice to have a little boost in that. The distribution from QQQI and SPYI do not reflect the extra shares that I bought because I bought these after the distribution was announced. So I won't get the extra boost in that till next month. But at the same time, the prices of these dipped down a little bit. So I got those at a lower price. So it all kind of averages out at the end. But that's just the way I'm going about it. For the month, I was just about 3,500 compared to last month of 4,100. Last month we had 5 varieties, so there was an extra payment, a QDTE of about $500 or $600. That's what the difference is right there. I do expect these monthly distributions to bump up a little bit because every time I buy some more shares, I get more distributions. That's the way that works out. This is the chart that shows how things should have been and how things really are. I projected that I would grow at 0.75% per week. And if all that worked out in a perfect world, I'd be sitting at $100,000 in equity right now and a 42, almost 43% return from the beginning of the project since November 1st of 2024. I'm at 88,205. I'm up 26.01. So I'm actually down just a little bit. The market took a little bit dip, and that's when I bought more shares of those different ETFs we talked about. The total I have invested is 166,000. That counts the margin plus the equity. I'll probably buy 100 shares of ETFs each month going forward, being divided between SPYI, QQQI, and MAGY. So that margin will probably stay about the same, about 77,000. It may grow just a tiny bit. It just depends on how many distributions I get for that month. The distributions, when they're paid each week or each month, goes directly toward the margin and pays it down. And every time it gets paid down a little bit, like it was down to 74 to 42, I spent 5,000, so it jumped back up to 77,000. It was at 77,000 about 6 weeks ago, and then it paid down. Then I bought some more shares. Hopefully that continues that upward trend, and at least I'm happy. This whole project is comparing the ETFs to how the house would have did. So this shows what the house probably would have did if I would have kept it in a perfect world, no expenses except for insurance and taxes. I'd be collecting $700 in rent and then paying these bills. I'd have about $4,600 in my checking account, assuming nothing else went bad. I assume the equity would grow at $233 per month, which is 4% annually. I'd be sitting at 72,563 in equity plus the cash in the checking account. I'd be sitting at 77,183 for the house. And yes, every month somebody says you got expenses if you were going to sell the house. You mean there's no maintenance costs? Yeah, we do have all those things, but just keep things simple. I'm just counting the fixed expenses each month, which is basically insurance and taxes. And if you did all the math, we got the house worth 77,183, and the ETF is sitting at 88,207. They both started out at 70,000, and this is where we're at. So the ETFs are up 11,022 for the year so far. And jumping back to this slide, just one more second. The blue line shows the 1-year anniversary of when I started this project. So we're getting close to the 1-year anniversary. I don't think I'll be at 103,000, but hopefully, maybe if things get really lucky, maybe I'll get to 100,000. Who knows? And then the green is after the calendar year. And that's at the end of the calendar year, I'll maybe recalculate my weekly percent of 0.75%. Maybe I'll lower that down to 0.65% to be more realistic. But we'll see where we end up. If we end up close to 10 at the end of the calendar year, maybe I'll just keep it at 0.75%. If the interest rates keep decreasing like they're talking about for the next 6 to 9 months, it could possibly grow at this rate of returns. So there you have it. A whole hum week, except for I bought some more shares of some things, so that added a little excitement. Don't forget to like and share and do all those good things that you do for YouTube, and we'll give you another update next week.